Okay, the other thing I wanted to run through a problem that I think incorporates critical thinking skills with some of the concepts of Social Security taxation issues. So let me just bring up number 42 at the end of the chapter on page 3-37. Okay, so 42, and generally in these the way I construct these templates and these Excel spreadsheets is I have my color coding is that the data given in the problem is purple, so you can enter data in purple cells generally only. The gray cells represent intermediary calculations, so they'll have formulas in them. And then the yellow cells will have answers, the final answers. So I'll scroll down here to number 42. And it's interesting, this problem, it's going to position my spreadsheet properly here. All right, so if we look at 42, and you can follow along on page 337 if you like, Sean, who is single, receives Social Security benefits of $8,000. Again, the objective is how much, if any, of the Social Security benefit is taxable. But there's a twist in this problem, a kind of a critical thinking twist, and that is this taxpayer has some stocks that they're thinking about redeeming, that is selling some stock. And they come to you for advice. And they said, look, I'm receiving Social Security benefits. Is now a good time to sell these stocks and a price is $10,000 capital gain? That's really what's at the heart of this problem. So the way I solved this is I said, all right, I ran it both ways. I said, this is the data. This is the information given to us. And in this case, there was no cap gain to calculate. All right, so in the first case, I took the provisional income of $19,000, and the $19,000 is calculated as we did earlier by taking the adjusted gross income. And so as I look at the problem here, the adjusted gross income in this case is I see that what they did is they gave us, so the adjusted gross income then in this case is I will take then dividend income of 13, and I will add to it the interest income of 2, and then I'm going to add half of the Social Security benefits, which is 8,000, half of 8,000 of 4,000. So that's how I determined provisional income. There was no, this is obviously a retired person because there was no earned income. I mean, it wouldn't have to be a retired person, but it's likely a retired person. And so step one is determine provisional income of $19,000, right? Which again is dividends plus interest plus half of Social Security benefits. All right, so that's a calculation I needed to make, intermediary calculation. Then the next thing I need to do again with my first scenario of not selling the stock. What will the tax situation regarding Social Security benefits look like if I do not sell the stock? Well, if I don't sell the stock this year, then none of the Social Security benefits are taxable. And the reason I know that none of the Social Security benefits are taxable is because this $19,000 of provisional income that we calculated a minute ago, that falls below this $25,000 lower threshold. And as long as it's below that $25,000 threshold for this single taxpayer, then none of the Social Security benefits are taxable. Now scenario 2, my client sells the stock, all of the stock, and realizes a $10,000 capital gain on the sale of that stock. Now my provisional income is going to go from $19,000 up to $29,000. Look what that does to our provisional income. It puts it between the lower limit and the upper limit. That means that some of my Social Security benefit is going to be subject to taxation. Now the question is, if I sell all these stock, $10,000 worth of stock, sell all the stock and get a $10,000 cap gain, how much will be taxable. So I have a formula here, but I'd rather just kind of explain how I did this calculation. The best way to do that is if you could follow along on page 312 and take a look at how it's articulated in the book and expressed in the book, and then we'll kind of dissect the process. So it says first take the lesser of 50% of the benefits. Well, we know that $8,000 is our Social Security benefits, right? So we're going to take our Social Security benefits and we're going to take half of that, 50%. And we're going to compare that to the second part of the test, which is 50% of the excess of provisional income over $25,000. So our provisional income, we said, if you sell the stock, is $29,000. So we'll take the difference between $29,000 and $25,000, or the lower limit, and then what we'll do is we'll take 50% of that. And that's $2,000. So we're going to compare then, for the purposes of, since we fall within this range, we're going to compare half the Social Security benefits to half of the difference between our provisional income and the lower limit. So half of this $4,000 is 2. That is the amount then of our Social Security benefit to be taxed, subject to taxation, is $2,000. Of this $8,000, 25% or $2,000 is subject to taxation. So when we advise our client, then we'll say, all right, look, it's better you don't sell all the stock this year. Keep that provisional income below $25,000 for a single person. If you do that, you can realize the capital gain on some of the stock, but it won't negatively or adversely affect your Social Security benefits. So yes, by all means, sell some of the stock. You can sell half of it even, and you would stay below the threshold, because you'd have half of the capital gains would be $5,000, and 19,000 plus 5,000 is 24,000. That's still below our lower threshold. So they could sell half of the stock and get a $5,000 cap gain, and it would keep their provisional income below the lower limit of provisional income threshold. So feel free then to go through the rest of the problems. You can kind of walk through them, change values around a little bit to kind of test your understanding and knowledge of them, your manual calculations. And feel free to let me know if you have any questions as you go along in Chapter 3.